Good afternoon, and welcome to another Wall Street Wednesday. This is Wall Street Wednesday. Today is July 14th, 2021. This is episode number 55. Welcome. Hey, Lance, what's going on? Welcome, guys. Welcome. Andy, seeing names, welcome. All right, before I start talking, I always got to drop in my disclaimer. Remember, today I'm going to share with you my opinions on the market and some trades and some ideas. Again, these are just my opinions. Take those with a grain of salt. Seriously, no. Before you do any investing, make sure that you speak with your advisors. Make sure you're getting some professional help. Again, these are my opinions, and my opinions do not guarantee performance. So I'm just sharing with you my opinions and my thoughts. All right, I'll give people a couple of minutes to join in. As you guys know, the markets, let's see, inflation. Big talk's got to be inflation. I know that the PPI, Producer Price Index, was high today. I know yesterday the CPI was high. So what's going on, Gary? So inflation is a issue that is coming out. And I listened to the actual Fed, Chairman Powell, talk to some of the senators today. So it was pretty interesting. So the Fed basically believes that, inflation's here. Inflation's going to be here for a couple of months as we come out of the pandemic and things open up and we're starting to see more and more demand from people, consumers. So inflation is here. The Fed does not think inflation will be extended. So when they say they're not extended, they're talking about a couple of months. So we might see high prices for a couple more months. At least that's what the Fed thinks. The Fed also does not see any reason why to raise rates right now. They said that they don't see any reason to fight inflation yet. So again, that's the long-term view. For those of you on the call who aren't too familiar with what happens with inflation and Feds and so forth, when inflation kicks in, the economy's firing on all 8 cylinders, prices are moving higher, inflation becomes a real issue, cost of goods and services that go higher are growing faster than what we can make in terms of the money. So costs go up. The number one tool for the Fed in terms of fighting inflation is interest rates. And the interest rates that the Fed controls is the Fed funds rate and the discount rate. So whenever we see the Fed go to fight inflation, the main tool they use is to actually lower Fed funds rates, which is basically a 30-day rate. Right now, that Fed fund rate, I haven't looked, I apologize, but last I think is between 25 basis points and 50 basis points is where they're keeping it. So just something interesting to keep an eye on. With inflation. I'm not sure how the Fed's going to handle this, and we're in new territory. All right, enough of that. Let me get started with, I'm going to jump, let me do the commodities first. That's on top of my list, so I'll do commodities first. Again, for those who don't know or don't remember, when it comes to commodities, what I do is I actually look at the Commitment of Trade Report, the COT, Commitment of Trade Report. I use that as my indicator for fundamental indicators. I use a commitment of trade. Again, just real brief. I look at what the actual the large institutional, not the institution trades, but the commercials, the companies that deal in the raw materials. So if I'm looking at corn, I'm looking at what the farmers are doing. I'm looking at what Archer Daniels is doing, Midland. I'm looking at those guys. So by tracking the commitment of trade report, I get the fundamentals. It gives me a signal on what to buy or what to sell. It's a longer term indicator. I couple that with a 10-day moving average to determine when I want to get in, when I want to get out. So with all that said, last week I told you new recommendation was gold. Stay with gold, especially with higher inflation. All right, inflation. In periods of inflation, inflationary periods like we're in right now, you typically want to buy hard assets, gold, silver, oil, real estate. Typically, that's what you're going to see, hard assets. So right now, again, I'm going to say continue to buy or hold gold. Stay long the yen. Last week, the two new recommendations were the yen and gold. Stay long yen. I think there's more upside to the yen, so I would stay long yen. New recommendation. Sugar. Get short sugar. Sugar is breaking down. It's below its 10-day moving average. And sugar has a large short position by the commercials. So again, get short sugar, prices are really high. Other position that we talked about, close out your Brazil real. Close it out today. Today should have been closed out. Today it crossed above its 10-day moving average. There was a nice move in there, made some nice profit, but take your profits in that, close out. What else? Stay short the Canadian dollar, stay short the British pound. So stay short those two commodities, the Canadian dollar and the British pound. So I would stay short those two. All right, let's see what else. Boom, 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 boom. Okay, let me jump to commodities. I mean, not commodities. Let me jump to the Bitcoins, the cryptocurrencies. All right, as you guys know, Bitcoin's been trading in a range. What's interesting, especially for my people that are involved in technical analysis, Bitcoin has formed a bearish right triangle. All right, again, Bitcoin is forming a bearish right triangle. A bearish right triangle is a descending from lower lows and lower highs to a support level, and that support level will actually create a right triangle. So right now, very bearish on Bitcoin. Now, I'm not sure how the cryptos trade in terms of technical analysis, but right now, technical analysis has been pretty on point with these. So the thing I would say to you, if Bitcoin, and I'm going to the chart right now, so bear with me. If Bitcoin breaks, cryptos, BTC, I would say, where's my Bitcoin, the one I want? Bear with me a second. I would say, there it is. Bitcoin break below 3180, 3175, that range at 3180, high 31,000. It breaks below that, you easily could see this thing move down to 24,000, 20,000. There's not much between 30,000 or 32,000 where we're at and 24,000 and 20,000. There's not much in between there. So if it does break down, you could see some selling pressure, especially as more and more people use technical analysis to analyze cryptocurrencies. Ethereum sitting right at support at 2010. Actually, let me check. It closed at 2000. Well, it shouldn't say closed. When I looked at it, it was at 2010. All right, bear with me a second. Let me pull up the chart. Yeah, so I would say Ethereum. Come on, Ethereum. That's the one I want. All right, so Ethereum sitting right at support. Closed today at 1986. Well, that's where the last trade was at. That's right. You're sitting right on support. It breaks this 19 level. It breaks below this. Your next stop is 18,000. It breaks 1800. Excuse me. Break 1800. You're looking at 1600. All right. So Ethereum is, right now it tried to rally. It couldn't hold a rally, and it's actually back at near-term support. And you got some minor support at 1800. And if it breaks 1800, 1600, your next stop. No question about that. The other one is ADA, Cardona ADA. Same story. Let me pull up the chart. Let's see, I want it in dollars. That's not the one I want. Cardona ADA. That's the one I want. All right, Cardona ADA, again, right in the middle of a trading range. Cardona ADA, you're right in the middle of a trading range between $1.16 and $1.40. Closed today, or right, I shouldn't say closed. Last trade here was $1.26, $1.27. So you're right in the middle of that trading range. You have some minor support at $1.20, right there. All right, let's see what else I have. This one, Doge. I call it Doji. I'm learning. Doge. See if I can find that chart. Doge does not have a pretty chart. Doge in dollars. It's not the one I'm looking for. Where are you? There you go. No, that wasn't it either. Why am I not finding the one I'm looking for? Oh well, I'm not gonna waste too much time, and I'll tell you why. Because this thing is truly here it is. So Doge, downward trend. It's in a downward trend. All right. It's been breaking down. You're sitting right near some near-term support, minor near-term support at 19, but your major support's at 17. You break, all right. Your Dogecoin is sitting at a major support level. The one benefit I can tell you guys, if you actually long this thing, is that Volume has been drying up over the last couple of days. So light volume means maybe the selling pressure is coming off. But in a downward trend, I'm looking at this chart, not a pretty chart, downward trend. Like I said, range between 17 cents and 28 cents. And if it breaks 17, so that's Doge. Last but not least, the one that we always talk about is Ripple. If I could spell, fat fingers. All right, Ripple. Where's Ripple? There it is. Ripple, Ripple, Ripple. All right, Ripple, trading range. It's in a trading range between 50 cents and 72 cents. Real simple. Ripple's in a trading range between 50 cents and 72 cents. You break above that 50 cents onto the upside, your next stop is 60 cents. You break below that 50 cents, where it's at now, your next stop looks like it's about 42 cents. The one thing I'll say about these cryptocurrencies, they're either holding steady or they're in a downward trend. So they're either trading sideways or downward trend. It seems as though right now the market has lost interest in them. Again, I don't know when it picks up. That's not my job. I'm just telling you what's going on. If you're long any of these, good luck with that. And I would look for these things that maybe when they start breaking through their upper resistance level with some heavy volume, that's what I would look to do with these cryptocurrencies. All right, last but not least, last week we talked about DDI, DI. We talked about DDI. So bear with me a second. I'm putting the symbol up here so you guys know. DI. And I told you that stock was going to break down. It broke down. As I told you, as it broke down, I said I would not be surprised. In fact, I would expect it to go back and fill the gap. So I'm pulling up the chart right now. So there was a gap in DI, DD Global. There was a gap in There was a gap in the stock. I'm just pulling up the chart. There was a gap. It broke down, and there was a gap basically between $14 and $12. I told you there was a gap. I told you I expected to fill this gap. I said I would stay short DD, but I expected to fill this gap. And today it got as high as $13 and change for trying to fill that gap. Once if it does fill that gap completely, again, I think you're in a better position being short DD. There's a lot of things going on with the IPO market in China. There's a lot of things going on with this company where things were not basically, or things weren't accurate. So I would look to be short, or look to get short DD at two spots. If it fills this gap on the upward, I get short. If it breaks below the low right now is $11, you break $11, get short again. The last one I'm going to bring up is Oatly. Oatly went public. Went public. I'm trying to get the exact date. Bear with me a second. All right, so Oatly went public back in end of May. Ran from basically a low of 20 to a high of 29. Always makes me laugh when it does that. Oatly now has been under pressure. Off the high of 29, which it hit basically in mid-June, it's done nothing but come straight down. So the thing I'm saying to you is, and also one of your major short sellers wrote a 126-page report on Oatly, talking about that they inflated the numbers, that they did certain things. Not uncommon for short reports to come out like that when the guys have a short position. It is actually, again, what you're seeing with GameStop and some of the other stocks. It's front running. So what you'll see happen is a lot of these hedge funds, institutional investors that will get a short position in a stock, once they build a short position and take their short position, they then start to promote their short position to the market, telling the market all the reasons why they shorted the stock. They want that bad news to be reflected in the stock price, and we're starting to see that. The stock did close down. It opened up down today. Hit as low as, looks like mid-19s, closed at $20.54. Still not the all-time low, although it did hit an all-time low today, which basically is below the IPO price. Again, that first day of trading, let me get my numbers right. First day of trading, Oatly went as low as $19.99. It broke that today at $19.62 and closed at $20 off a heavy volume. So I'm not telling you what to do in terms of the short recommendation, but I am saying that you have the area of least resistance is to the downside. And now that you've broken below your IPO low, which was $20, $19.99, yeah, I would be comfortable being short this. And I'm almost positive there are options on Oatly. So again, for those who don't know, Oatly Group, they're the ones that make the oatmeal milk to compete with traditional milk. All right, last but not least, do not fall asleep on the secondary market. When these IPOs, the ones that went public 6 months to a year ago, do a secondary. Keep your eyes on them. Shoals. Let me type in the symbol. Shoals. Well, let me type in the symbol. Come on now. Thank you. SHLS. And I'm going to talk about also L brands. All right, let me post that so you got that. Welcome, guys. All right, so here's the deal. Shoals announced a huge secondary. All right, they put it on the books. They went and did the road show, so forth, so on. When they announced the secondary, the stock that day closed at $35 and change, $35.28, somewhere around there. The next day it opened up at 33. Today it closed at 28 off of heavy, heavy volume. The secondary is coming tonight. Now, why am I telling you all this? Two things. One is stock hasn't been public that long. Stock only came public. Bear with me a second. I'll give you the exact date. Stock came public back in January of this year. All right. So it came public back in January this year. Senior management needed to raise some money, so they're coming to the market with what you call, actually this is a seasoned public offering. They're offering more IPO stock, but they're doing it in the secondary market. Puts a lot of pressure on the stock. Stock has not been trading well. Puts a lot of pressure. I'm not sure if I'd be long or short, but it was nice short once they announced the secondary. The other one that's doing a secondary tonight is L Brands. Now, here's what's interesting about L Brands. L Brands announced a secondary. They're doing a secondary today. Two things. One is L Brands has been trading extremely well, but L Brands is not near its new high. So for a trading idea, L Brands most likely is going to announce this thing. They're going to price it in the hole. What that mean by price in the hole? The stock closes at $75. I would not be surprised to see them price the stock at $70, $71, $72. All right, but man, where they price it at, they're dropping a lot of stock on the head of the market. The stock's probably going to come in a little bit. Once the stock goes back through the secondary price, whatever they price it at, they price it at 70, 71. If it goes back through 70, 71, wherever they price it at, you can expect this stock to attack the $80 number. All right, there's resistance at $80. The old high is close to 100, which happened back in 2016. But you'll see some resistance at $80. You push through the 80, next stop should be 90 and to 100. But again, how I would play it, this stock being dropped on the head. In fact, I don't have it up. I was going to tell you how many shares it was, but I don't have it up. But they're dropping stock on the head. It's going to put some weakness in the stock. It's probably going to come. It's going to come in a bit. They're going to price it in the hole. Once they price it in the hole and they digest that stock in the marketplace, don't be surprised to see it push up through the offering price and proceed to go higher. Stock's been trading really well since basically, stock's been trading really well since April of last year. All right. That's all I have for you guys today. Relatively quiet market. Oh, well, of course, the other thing too is we are in earnings season. Let me not forget that. We are in earnings season. Several of your bank stocks reported numbers. They beat the numbers on revenue and sales, but there's not much follow through. Goldman Sachs had a good quarter. I can't remember. Somebody actually doubled their number. I think it was American Express. American Express is not a bank stock. A lot of people think it's a financial, but it's not. But American Express actually doubled its earnings expectations. So they doubled what they were expecting, and they beat on revenue. Stock, if you look at AMX, a second. I'm sorry, AXP, I call it AX. If you look at AXP, American Express, you'll notice that. Hold on a second, let me switch to a daily chart. If you look at Amex, look at it today. Wow, it didn't hold it. All right. Didn't hold it. All righty. So that's all I have today. So now I'm going to open up for questions. I see that Mr. Cornfield, Andy, is already ahead of me. So let me take a look at these stocks for Andy. Bear with me a second. Let's switch that to there. All right, so Andy, you have TDUP. Stock's been public since March. Bear with me a second. I'm going to the chart. All right, so what are we looking at? Interesting chart. I don't know what they do. I'm just going by technical analysis. The old high was hit back the second day of trading. Come on. The second day of trading, it hit the old high, which was $31.60. It's been up here to $31.86. It's been up here to $31.32. So here's the deal. You'll hear some guys talk about double tops. The stock has had trouble getting through this 31 number. All right, so which it hit the second day. So you're having a hard time getting through there. Intraday, it got through it but didn't hold. It tested up there again intraday and didn't hold. And I see today it's actually down maybe $3 or $4. So the thing I would say to you is, I would get, and it's down off a decent volume, more than average daily volume. I would be patient with this thing, and it's failed a couple of times, so I would not buy it unless it pushed through that 32 number, 31 and change, number 32, and pushed through with some volume and held it. The other downside to this is that if it does break down, if it starts to break down, your first stop is 24, your next stop is 22. After 22, your next stop is 20. So it's got some work to do here near term. It's failed. Near term, it's in the trading range. It looks like between the 30 and 25, 26 numbers. So that's the range you're in. You need to break out of either one of these ranges. All right, that was TDUP. Looks like, was it trend up? I haven't looked at this in a while. Poshmark. Woo. All right, bear with me a second. Poshmark. Ham, what's going on, sir? How are you? Welcome, Ham. All right, so let's see. Poshmark. Old high is, let me open that up. Old high is what? 104. You've got some, wow, look at that. You got some major support right here at this 37, 38, 36 range. It's been sitting there. It's hit this a number of times. Let me pull up a daily. All right. A little more chart. All right, you're sitting right at near-term support. Near-term support's $38. You're sitting right on it. Close today at 38.02. You're sitting right on near-term support. You have some minor support at 33. And after that, if it breaks 33, you're in a downward trend. No telling how low it's going to go. So as you guys know, the stock came public back in January this year. Was high as $100 a share. I think let me just double check. Yeah, okay. And it's done nothing but basically come straight down. It's in a downward trend. It tried to rally back up. It got to that, like I said, this resistance at $50. It didn't hold that. And now it's at support level. And it's been at this support level 1, 2, 3. This is its fourth time down here. If it breaks this level where it's at, and it breaks this $33 number, get short this big time. I'm going to write this in my book. Posh at 33. All right, before I jump on, let me just say a couple things to you guys. One of the things I do, like what you just showed me, you showed me Posh, went public, I remember the IPO, so forth, so on. One of the things I do is I set up alerts on my screen. All right, so now Posh trading at $38. I'm sorry, Posh closed today at $38.02. And I'm looking at the chart and I'm telling you if it breaks 33, it's in the free for all. So what I'll do is I'll actually go into my stock account. I'll put in Posh. I'll put in a number of $33 a share. Or actually, I'll put in an all-time low. So as soon as this stock hits its all-time low, whenever it does, and it's really close to it, and it's the point of least resistance, I would look to get short Posh. That's my opinion. It break this 33, I get short. All right, I don't know how else to say it. So 33, and I'll call it NL, new low. Posh at a new low, I'll be all over it. My opinion. All right, the other one that you gave me, Mr. Cornfield, was SYF. Financial stock, I don't know the company that well. Oh, man, I haven't looked at this stock since it went public years ago. When I say years, I'm putting up a monthly chart. Years ago, and I actually was long the stock. Look at that. Yeah, it went public in 2015, 2014. Yeah. All right. So anyway, let me switch this back. So the good news is stock is at an all-time high. Why can I not remember exactly what it was they did? Oh, well. It's been a while since I actually traded this stock. All right. 47 is your support, and 51 is your resistance. Real simple. Stocks in the trading range. Stocks in the trading range, you can see it clear as day. Yep. 51's the old high. You're in the trading range basically between 50 and 47, 48, right around where it is, where it closed today. All right, that's the trading range. You've got earnings coming out on this thing, looks like on July 19th. Looks like they're looking for $1.38. The financial stocks have been trading really well. I would not be surprised to see this, like a lot of financial stocks, break the number and keep rallying. Speaking of bank stocks, another stock I just want to recommend, a banking stock, is First Republic Bank, FRC. Very unique niche bank here in Southern California. Really solid performer. Trying to look now, let's see, yeah. Earnings already came out. They were looking for $1.73. They came out at $1.95. They beat on earnings. They beat on revenue. If you're into banks, if you're looking for a bank stock, it's one I happen to like. Some of my former students on here might recognize the stock from our portfolio. Excuse me, but that's one that I like. I had a question, what does it mean to be short? What it means to be short is you're playing for the price of the stock to go down. You make your money as the stock goes down. Thank you, Andy. SYF was the credit card company that was spun off. I believe they got spun off from GE, General Electric, if I remember correctly. Traded that one too. You know, when it comes to IPO stocks, a lot of times I've traded them already. But yeah, I traded that one. It traded really well. If I remember correctly, that's where they came from. And just what he said, they do a lot of the private label credit cards and kiosks and so forth. The bank stock I just talked about was First Republic Bank, symbols bear with me a second. Boom, there it is, okay. Symbol is FRC, First Republic Bank. All right, I'm just going through looking. So it looks like, Andy, looks like you have all the questions, so I'll keep going with Andy. I don't see another one asking about stocks. So I'll do what Andy's putting up there. Let's see, MSCI. All right, let's see. again, for those who don't know, I typically go to a monthly chart first. The reason why I go to a monthly chart is I want to see how the stock's traded its entire life. So the thing I'm looking at with MSCI is that you're sitting at all-time highs. Great looking chart on the monthly. Now I'm going to a weekly, same thing. Now I'm going to a daily. Now with a stock like this that's trading the way it is, MSCI. I use technical analysis with a stock like this to try and figure when to get in and when to get out. All right. So when the stock took out the old high at 493, 495, right around here, it took that out and ran. It just ran. It ran basically from 495 to 550. There was a couple of days here of backing and filling, and then it ran again. So it looks like now we're in a near-term, small little trading range consolidation. Based on the run from, like I said, and if you really want to go technical, from 465 to 555, you had a 90-point move from when it broke out of that consolidation. That 90-point move means a $45 retracement, so that could bring you easily, 45 could bring you that back down to $510. So at $510, I would like to, what I'd like to see, of course, I'd like to see a ton of money in all of our pockets, right? But what I'd like to see is I'd like to see some consolidation and some trading to the side. And then another breakout. The chart, again, long term, the chart looks good. The question now is when would I get in based on technical analysis? And the thing I would say now is you've had a really big run over the last 3-4 weeks. I don't know the company well enough to know what caused that run, but you might, based on technical analysis, you might want to wait for a pullback and a consolidation and go sideways and then a run again. There is a couple of two minor consolidations here, but they're real minor. So I would like to see that. I would not be surprised to see the stock trade down to like I said, the 510 range, the 525 off of this run they had. It would not surprise me. In fact, my bet is it's going to pull back to this 530 range. That's my bet, my guess, 530. But nice looking chart. Big question here is when to get in. All right, let's see what else I have. Just checking. Andy, I'm going to come back to you just because I have some other ones here that some other people I haven't done yet. So I'm going to do these real quick, especially since two of them I have an interest in. I'm writing down what you asked me for, Andy, so I won't forget door and builder. All right. Silvergate Capital. Why do I know this name? Jeez. My mind is not what it used to be. All right. That's what I thought. If I remember correctly, this is either an ETF or I don't think is this one of these SPACs? Is this an SPAC? I don't know. All right, let me go to a daily. SI. All right. You're near your all-time highs, but the stock was in a trading range between 180 and 120. It finally broke that down and it formed a new trading range between 120 and 93, 94. You're sitting right at near-term support. All right, at 93 where it closed today. If it continues to the downward trend, your next support level is going to be $80. All right. So again, it's in a double trading range. So it was in a trading range, like I said, between 180 and 120. It hit that 180 number right around there 3 times and couldn't break through. So then it finally broke support at 120. Went from 120 down to 80. Then it formed a new trading range between 120 and where it is $93, right around here. If it breaks this 93, which it could easily, it should test again that $80 number. To the upside, your near-term resistance is going to be at 117. If you own the stock, you're sitting right at secondary support. Support, don't know. But again, it's in a trading range. So if you do decide to buy it here, at 93, at the bottom of the near-term range, looking for a bounce. I'd put a stop loss in somewhere around 80, 85, 88. 10 points is $9. So at 93, you're basically looking at $84 anyway. So $84 is not a bad place to put your stop loss. And if you see it run from $80 or where it is now up to this 113, 115 range, take profits maybe if you're a trader. Maybe it breaks through that resistance, maybe it doesn't, but that's what I would do if I was looking to trade this. That's SI. The other one that you gave me was, somebody else gave me was, Coinbase. Coinbase. Woo. All right. What can I tell you on Coinbase? Coinbase is, let me make this a little bigger. Bear with me a second. This is interesting on Coinbase, guys. Coinbase took a couple of months, but Coinbase came back and filled the gap between 250. There's a little gap here. Maybe it's not, a small minor gap, but came back and filled that gap. You got near-term resistance at $256. You broke near-term support, minor support. Your next support level is 217. You break below 209, which is the all-time low, you're headed down again. Now, Coinbase is interesting. Coinbase is basically, for those who are trading it, there's a correlation between Coinbase and Bitcoin. Bitcoin is the largest cryptocurrency that Coinbase trades. So the more trading, now understand, not performance of cryptocurrencies, but the trading. And right now, trading is kind of slowed down. Volatility slowed down in Coinbase, in Bitcoin, and that's affecting Coinbase. What I would say to you is when the cryptocurrencies, especially Bitcoin, become actively traded, more trading. Now, I'm not talking about now. I'm talking about when the volume picks up and you see active trading in that. You'll then see probably a pickup in Coinbase. Again, Coinbase makes their money off of trading commissions. They make their money off of commissions by helping people to trade cryptocurrencies. The number one cryptocurrency that their clients hold is Bitcoin. There's your correlation. Remember, no company is unique to itself. All right, let me see. I think. Sorry, how are you, James? Welcome. So Andy, SI, is that a CPAC? Is that an SPAC company? And Shanna, you said that you brought it at 71. I'm assuming you're talking about SI at 71? I don't know. I'm just trying to figure out. I got a couple things on. Yeah, okay. SI's been around for a while. I can't remember. I remember the name. All right, so you're saying you brought SI at 71. All right, cool. James, stop it. Your portfolio's unhappy. Well, things are bad, when your shorts go up and your longs go down and you have no idea what to do. I've had plenty of days like that. If you own SI at 71, I'm not sure how long you've held the stock. So if you get out at 71, that means you brought the stock back, I'm assuming, because it hasn't hit 71 since back in January. So that means you rolled the stock in January. Now, Shauna, please don't take offense to this. You own the stock at 71 based upon in December of this past year, and January this year, the stock went from 71 and over the next 2 months went to 181. So there was a triple there for you, almost a triple. So if that's the case, my question to you is, why are you still in this stock that's come all the way back down to 93, then ran back to 180, then pulled back to 120? It's been a volatile stock. One of the hardest things for any trader to learn is when to sell, when to take profits. And this chart is telling you that there's a lot of things going on here, a lot of moving parts. I don't know if you get back to that 180 range real soon. I don't know what the company does, but whatever it does, the business that they're in needs to actually be, something has to be going on there. All right. No, please don't take offense. Trust me on this, and I've said this to my students all the time. No matter how much money you lose in the market, you've never lost as much as I've lost in a day. I've lost 6 figures, almost close to 7 figures in one day. All right, and some of my students know the story. So trust me on this. When I tell you about mistakes, don't worry about it. Anyone that tells you they've never made a mistake in the market, never lost money, never had any bad trades, is either a liar or they're a fool. So don't take offense to when I say, you shouldn't have held this long. Trust me, I brought stuff too long too. James, you brought global this morning. I brought global again this morning also. Yeah, I brought it again this morning too. I thought the breakout was real. For those who don't know, James is talking about GL. Now pull up the symbol. GLBE. We talked about it last week. Well, James, I brought some this morning too on the breakout. And it didn't hold. It did not hold. So anyone looking at the chart on global, just so you know what happened, I'll give you the numbers today. Global opened up today. The symbol I guess gave you. Opened up today at 62, ran to 68.73. It was off of basically almost twice the average daily volume. That was a breakout for me. I got excited. I got in. Well, I got in this morning, and like James, the stock closed today at $57 off a daily low of 55. So I'm not, again, I don't know what's going on. The volume's there. I shouldn't. What's the word? I'll be honest. I'm surprised. I'm really surprised. I thought this was actually the run that I was looking for, and it basically failed. It did not hold up. So I have to look and see if I got stopped out, but that's what I did. All right, bear with me a second, James. I promise you. I got to get 2 other stocks. I got the stocks for Shannon. So let me do this real quick. Let me get back to Door. D-O-O-R, Door. I'm going to a monthly chart. Let's see. All right. So the good news is 125, 130 is the all-time high. So we're sitting right at the all-time high. So that's a good thing. All right. I don't know what the company does. But again, you're looking at something real easy here. You've got another stock sitting right at support. 109, 108 support. Near-term resistance is 114. You get through to 114, you're looking at 120. So the stock hit an all-time high back in April, sat up here between April and May, and then it broke down. And it ran off of earnings, but it couldn't break through the old high at 130. Interesting. And earnings were better than expected. They had a surprise. But again, stock ran off of earnings, but still couldn't push through that all-time high. And then now it's backing and filling, and it failed. So I don't know what the earnings are looking at. I don't know what they expect for earnings. Earnings are due on this again. Come on. Earnings are due on, bear with me a second, I'm sorry. Thank you. Earnings are due on this, let's see, sometime in August. Yeah, you're right at support. You got resistance at 114. You're right at support. If it breaks the support at where it's at now, this 108, 109 range, your next stop is 103. Right now, the path of least resistance is actually to the downside. All right, that's Door. Let's see, James, DLO. Yep. DLO actually has the same chart as Globe as was that I forgot the name of that company. Geez, Globe. Global. I forgot what Global's full name is. That's me though. I'm always into symbols. I don't remember names. I remember symbols of stocks. All right. But yeah, same thing. I just wrote it down. DLO. I'll take a look at it. Couple things to bring up though. Yeah, door makes doors. I figured it did. What was I gonna say? Amazon, Alphabet, Apple, all set new highs today. All set new highs. Now, what's interesting is, in terms of number of new highs versus number of new lows today, there were more stocks that set new lows and new highs today. So what we're seeing is a couple things. The follow through, even on the ones that are setting new highs, volume's pretty halfway decent, but volume is what you want to key in on. And then the other thing is, a lot of these stocks that are backing and filling, consolidating, they're also doing that off a light volume, which is actually a good thing. So we'll have to see what goes on. Now, last but not least, and I'm going to bring this up, and I got to type this in. All right, I typed in the VIX. I know we've talked about the VIX a few times. I'm talking about the VIX again. I put the daily VIX up. I'm putting up my Bollinger Bands. Now again, my Bollinger Bands set for 2 standard deviations. My Bollinger Band set for 2 standard deviations. Now why am I doing that? Let me make this a little bigger. Right there. That's what I'm looking for. On July 8th, the VIX penetrated the upper Bollinger Band set for 2 standard deviations. It means that near term, the market was oversold. Now, why am I telling you this? Bear with me a second. I've just got to switch some stuff up here. Close that. Close that. On July 8th, the market, let me get my actual information to make sure I'm giving you the correct information. On July 8th, the market opened up at 428, below the 10-day moving average. That same day, I'm talking about the S&P 500. When I say the market. The same day is when the VIX penetrated the upper Bollinger Band and gave you a buy signal. So what I'm telling you is that was the 8th was what? Today is what? Today is the 14th. That was last Thursday. Yep. So that was last Thursday. Last Thursday, the VIX penetrated the upper Bollinger Band. The S&P broke below the 10-day moving average, and then basically ran from there. So I got maybe 11 minutes. I'm going to repeat this to you guys. I know a lot of you guys don't look at this. I'm telling you, on days when the market sells off, especially on days when the market sells off, pull up the VIX, put the Bollinger Bands on it set for 2 standard deviations, and if the VIX has penetrated the upper Bollinger Band and the S&P is below the 10-day moving average, go long the market. Just that simple. Now, the hard part is you literally find yourself going long the market on a day when the market could be down 3, 4, 5, 600 points, and you're going long the market. All right, so that's why I say. All right, so I got 2 questions. Lance, I'm going to try my best to get to your question. I'm going to let me pull up BLDR. I wrote that down too, and I forgot to pull it up. BLDR. Let me switch to a monthly chart just so I can see. All right, so I'm assuming which I shouldn't do. All right, we're at an all-time high. So, seeing some volatility in a monthly chart. If I see volatility in a monthly chart, it means there's probably going to be a lot of volatility in a daily chart, but we'll see. BLDR. All right, you're probably tired of me saying this, but another stock sitting right at near-term support. And that's where you're sitting. You're sitting at near-term support. You're at the bottom of the trading range, right here at the $41, $42 level, $41 level. And you have some resistance at 44 and some more resistance at 46. Yeah. Volume's been somewhat light. If you break this support level where it is now at 41, you got some more at 40. Here's the one thing I'll say to you about Builder. Again, I'm not sure if you're long-term or short-term here, Andy, but Builder is not going to give you a major run in a short period of time. All right, so you're not looking at a stock that's going to go from 40 to 100 in 2 or 3 months. It just doesn't have that power behind them. Just looking at the chart. Everything seems to be within a 10% move, up or down. So you're going to hit a couple of support or resistance levels within 10%. So if the stock goes down from, I should say 10%, 10 points. Stock drops by 30 points to $30 by 10 points. You're going to actually crash through 2 support levels. If the stock goes up by 10 points from 40 to 50, you're going to go through 1, 2, you're going to actually go through 3 resistance levels. So I say all I have to say is, I'm not sure how much juice you're going to get out of this if it does what you expect it to do. All right, can I talk about your profit-taking strategy when stocks are making all-time highs or when they are free fall, and you're shorting? All right, Lance, this is not a 5-minute response. I wish it was. I'll touch on it a little bit, but if you remind me in DM, I'll talk about it a lot more next week. But the short is, if I just buy a stock, let's see, I got a couple minutes, so let me see. When I'm new to a position, when I just get in, I'm going to run my stop. My first stop is going to be probably no more than 10% below my purchase price. All right. If the stock starts to work and starts to run, and starts to move up, let's say it moves up 25, 30%, I'll move my stop to where my purchase price is. All right, I'm still there, but I moved it to my purchase price. What I'm looking for, one of the things I talk about is that while the stock's running, I'm looking for it to actually do some backing and filling. So I like to see it run, consolidate, back and fill, and then run again. During those periods of consolidation is when I'm going to raise my stop again. And when it breaks out of that period of consolidation to the upside, I'm going to raise my stop. Now, if the stock has gone up more than 50% from what I paid for it, I'll move my stop probably to a profit about 20, 25%. And then I let the stock go. And what I mean by that is I'm a lot more forgiving when it's the house money. So I'll let a stock break down from its initial support to even the second support level before I sell it, because I've got a huge profit in it. The only way I can get a stock to go from 20 to 100 is I got to give it time. No stock's going to go straight up. I got to give it time to back and fill, consolidate. All right. As it starts to move up and I get more profit, I'll give it more leeway. I'll give it more room. I guess the best analogy I can give you is your star player your star hitter on your baseball team has struck out the last 5 times at bat. I'm not going to bench him. He's my best hitter, all right? He's just going through that little slump like we all do. As soon as he gets his groove back, he's going to take off again, and that's what I'm betting on. So with my stocks that if I want a stock that's making a big move, one that I talked about in the show, EPAM. I own EPAM. EPAM's doubled since I brought it, all right? I don't use a stop on that anymore. Don't even have a stop on it. I've got so much profit in there now that I can let it go and I can actually make decisions as I watch it trade. So I'll let it come back to support, near-term support. I'll even let it come back to a second near-term support. Selling that stock is not in my mind right now. Now, the first week, 2 weeks, first month, it was. On the short side, much harder. Reason why it's much harder is at some point the stock's going to become really cheap and you might see some buying come in because they think the stock is cheap. So what I do on that is, again, same kind of scenario. When I get a certain amount of profit, then I'll start to let my stop loss go. But the thing is, on my shorts, especially on IPOs when they break down, I tend to take my profits really quick because they can get a bounce. Now, in a bear market or with a company like, and I can name a couple, a company like Smile Direct, SDC. I stayed short that one for a while. Casper was short that one for a while. And the reason being is it wasn't so much that their IPO was that the stocks fundamentally were not good. Fundamentally there was nothing about them. Another one, ADT. You take a look at those 3 stocks. I'll type them in here. Take a look at those 3 stocks and you'll get an idea of what I'm talking about. ADT, Casper, and the other one I said was ADT, Casper. Who am I forgetting? There's Apron, APRN. And I gave you a third one. I traded this one too. Don't get old, guys. I forget what I'm saying halfway through a sentence. ADT, Casper, APRN. I cannot remember the third one. I just brought it up. Oh, well. I'll put those up. All right, guys. Lance, hit me up again during the week and I'll talk about getting short again. I got a hop. EPAM. That's the symbol. I got a hop because I got to save this. I think a couple people on this call besides me actually purchased EPAM. We brought it, I think it's actually almost over a year ago, close to a year ago, on an earnings play. So, and by the way, I've actually added to my position since then. So one of the things I do is like EPAM, trading really well. When it actually backed and filled and consolidated off of a high, one of its old highs, I added to the position and added to my position. Nothing like adding to a winner. So again, my motto for you guys is buy high and sell higher. Buy high, sell higher. All right, guys, have a great one. I will see you next Wednesday. Make lots of money. Professor Milligan out.